Welcome back to Let's Talk Live. Have you heard about Robo-Advisers? The growth of these automated investment advice platforms is a topic at just about every conference in the financial advising industry in recent months, but Robo-Advisers can be a very bad idea. Certified financial planner Bryan Beatty, a partner at the Tysons Corner-based financial services firm of Egan, Berger & Weiner, LLC, is here today to explain why. Welcome. I'm really interested to learn about this. Why don't we start with explaining to people at home what Robo-Advisers are if they don't know?
So Robo-Advisers are internet-based, algorithm-driven portfolio management tools. So you go online, you answer a few questions about your attitudes towards risk, maybe how long it is that you're going to have your money invested, and it pops out a portfolio suggestion for you. In many cases, opens an account and invest your money right away.
So you're never talking to a human?
Most cases, you don't talk to a human.
And you're taking all your hard-earned money and letting the computer figure out what you should do with it. So that's
pretty much how it works, yeah.
Okay, so now that we know what that is, how is it different than working with a real face-to-face person?
So when you work with a financial advisor, they're going to ask you a lot of things about your life, about your family, about how you made your money, how you feel about losing money, what your tolerance is. More away from numbers and more towards what if you couldn't accomplish one goal or another goal, and prioritize your goals for me. What if you can't achieve this goal? Which one would come first?
Sure, and what you want to do with where you want to see yourself go. And really, working with a financial advisor, it's a long-term thing. It's not just a type some things in there. It's a journey.
Well, hopefully it's a relationship.
Right.
I hope you're not having a relationship with your robo-advisor.
Exactly. It'd be difficult to do.
Yeah.
So how can, going on to one of these robo websites just be a disaster for you, a mistake? And how much can it cost you?
I think that's an excellent way to put it. How much can it cost you? So if you make the wrong selection with your Social Security, as far as not maximizing your benefit, if you can afford to wait, which requires having an actual well thought out plan, as if you can wait, but if you don't wait, it can cost you as much as $100,000 of lost benefits. A robo-advisor is not going to go through a Social Security analysis with you.
And that's something that you guys do. And what would you say to people that maybe have already gotten themselves involved in one of these situations? Is it too late to get out?
Well, what I would ask people to think about is whether or not, when the markets go crazy, for example, in the last 6 to 8 months, are you likely to act more quickly because someone isn't there to consult with you at the moment that you're feeling like you should sell out of the market? And with that, we're really talking about how people act.
I think people understand finances to some degree, but there's this behavioral finance. Explain that to me, because I don't know what that means.
Well, it's how people understand money. Many people will tell you that they can take a 10% drop in the stock market, but when it happens in 2 weeks, fund flows tell us that people leave the market at those times. In fact, the average investor tends to lose not because they didn't invest in the first place, but because they moved their money around at the wrong time. In fact, fund flows show that more money moved out of the market in the last 2 quarters than moved out in any time since 2008.
Wow. So what is your advice to people that are watching at home right now that are saying, I need to get involved with a financial advisor, and how it is so easy to just go online? Sure. We see it all the time, the ads all over the place. How do you avoid that, and what should they do?
Well, one thing you want to make sure you do is you work with a fiduciary. That is somebody who puts your interests before their own, someone who's transparent with how they operate, and they disclose all of the potential conflicts. And make sure you get a financial plan. Don't get just an investment. Investment is a way to manage money and a way to deliver a plan's outcome, but it's only one component of a financial plan.
And any age, it's never too late to start, correct?
Well, it's never too early to start.
Never too early to start,
It's definitely never too late to improve your financial plan. Don't think that you can improve it and therefore do nothing. You can actually help yourself every stage of your life, whether you're just beginning a family, whether you just bought your first home, switching careers, no matter what part of your life you're in, a financial plan will actually take you to your final destination, wherever that might be.
Well, I always say you wouldn't trust a doctor, somebody that wasn't a doctor with your health. Why are you letting someone that isn't an expert with your money? Trust the experts.
I couldn't say it. I couldn't say it any better.
Again, I hear it all the time. People I'm not going to have somebody tell me what to do with my money. Well, yeah, but I don't know what to do with my money. I'm clearly not doing it right. So, well, thank you. I think it's great advice. And stay away from those robo-advisors. Bad stuff out there. And for more information on the growth of automated investment advice platforms, visit ebwllc.com or go to ebwfinancialnews.com. You can even call 703-506-0030 right now and actually talk to a human. All right, stay with us. We have more of Let's Talk Live coming up in just a bit.